how could you not want a guy that looks like Ross Beaty?
Sure.
Right? What a great person to have, right? What was his single largest frustration is that we hadn't yet surfaced the value. You had Calibre, which was a deliverer of, you had Equinox, which was an M&A. You're putting this together and you can create a lot of value out of this portfolio of assets.
This is Jay Martin.
Darren, it's so good to have you back in the studio, man. Good to see you.
Yeah, appreciate it, Jay. It's been a while, but great to be back with you.
It's been a while, and a few things have changed since the last time you and I sat down together. So normally, I like to begin these conversations getting your thoughts, unpacking the gold market a little bit, what you're paying attention to. Today, I just want to actually jump into the recent transaction, and then we're going to end up talking gold market anyways, so we'll get there. But obviously, the big news since the last time you were in front of my audience is the $1.8 billion merger between Calibre and Equinox Gold. And the reason I want to headline this to begin our conversation is because investors should be paying attention to this. This is a new company with sights on 1 million ounces of production in the near-term vision. You've taken the helm as CEO. You've been on my show many times talking about your previous company, Calibre, and the success with that organization. Ross Beaty is staying on as chairman, and Ross has been on my show talking about Equinox a few times. And so this is like a great marriage of leadership and assets. I think 1 + 1 becomes 3, but I want to unpack it a little bit here. So let's begin with the why. Why did this transaction happen, Darren?
Well, I guess there's two components to it. If you're looking at it from a Calibre perspective, you're looking at it from an Equinox perspective, right? As a Calibre perspective, we had a great re-rate opportunity with the birth of Valentine coming up, which we're seeing today. We've actually started processing ore at Valentine in Newfoundland. We'll see first gold coming out later this month. So we're in a really good situation. But what next for Calibre? We're an explorer backed by, 250,000 ounces a year of production. Right? So we saw good run rate, but how do we continue to grow shareholder value? So we looked at Equinox and saw there's a great asset base, but there's something missing from Equinox. It hadn't developed the credibility in the market that the assets really should have seen.
Sure.
Right? Yeah. And, Ross is a great steward of, and Ross and Greg had done a great job over the previous decade at bolting those assets together, but it really hadn't surfaced value from those assets. So we looked at it and thought, well, why had Equinox 1.0, I'll call it, performed basically flat for the last 3 years on a share price perspective when we'd seen a great run in gold, we'd seen a peer group from a GDXJ up 80, 90%. Why was that? And it was really that the organization hadn't been able to deliver into expectations. So if you look at the marriage that comes from, right, we bring some human capital into an asset base with some assets. They bring a bigger asset base. Together, we end up with a great product that has significant opportunity to create shareholder value through cash flow, but also organic growth. And we have a combined team that's much stronger than the parts.
And that combined team is Equinox 2.0. Which
Correct.
we're going to talk about. I'd love to pull on a thread though. Why do you think it was that Equinox was unable to meet expectations over the last few years? Gold prices were rallying. A lot of the best-in-class miners were rallying alongside that. GDXJ up. Legendary management at Equinox.
Yep.
One of the most successful mining entrepreneurs that's ever lived. What was the issue, Darren?
Yeah, no. And it's, again, if we measure the success by share price appreciation, because ultimately that's the reason we exist, right?
Yeah.
Right? Why does any company exist? We're a financial instrument to create shareholder value through share price appreciation. That's the reason we exist. That is the measure. And we hadn't as Equinox. Why hadn't we? Because we created expectations and hadn't delivered into. And there'd been a rapid series of M&A over that 5-year, particularly the last 5-year period. And there hadn't really been the focus on execution and delivery against those expectations. So there was a gap in the portfolio. And that's what Ross recognized when we first started discussions. It was like there was something that I could add to and complement the existing management team to be able to round out what was a good team into a great team. And so we end up with a much stronger portfolio of human capital that allows us to deliver into. And that's where they really struggle. right? Was about how do you? And, I'm not an M&A guy. That's not my space, right? My space is really about creating realistic expectations, having the organization aligned behind delivering into those, and then deliver into those expectations. And that's where I see the value creation. The value creation is delivering on the dream. Ross is about creating the dream. So we're a good partnership in that space.
Yeah. Okay. Was there any resistance to this transaction from either shareholder base at Equinox or at Calibre?
Yeah, there was. And there wasn't one side more than the other.
Right.
It was an equal level of, which to me then sounds that's like a perfect situation if you had an equal level of disgruntled shareholders on both sides of the equation. Right. It wasn't that, most of the Calibre shareholders or most of the Equinox, it was a small portion of both. Because what was Calibre shareholders concerned about? Well, we were poised for a re-rate opportunity. We struck the transaction at just over $3 on an impacted price today, or unaffected price today, we're at $4.40. So we've realized that value that they were concerned about us not surfacing by getting together with Equinox. Why Equinox shareholders, the ones that did have resistance to, were further dilution. Right?
Sure.
Because you hadn't seen that share price appreciation, now issuing more stock, which is then dilutive. Why? Well, we look at the recent performance of the equity, we've done really, really well, right? So I think that the concerns that existed on both sides of the ledger have evaporated pretty quickly, which is, again, a sign of that it was a good transaction. And going into it, like I say, there was an equal level of concern from a small portion of. So to me, I think what we've got to is as close as you could imagine as a perfect transaction.
Okay.
Yeah.
So just to unpack that a little bit on the Calibre side, if there was resistance, it was maybe shareholders who had been along for the ride. They now feel like Calibre's success was meeting the right market and they were about to get rewarded for that, right? Nicaragua was producing over 200,000 ounces per year. Valentine was coming soon. That's another 200,000 ounces. Why would we change the model now, right? We've done everything right and now the market's arrived to us.
Yeah, we've gone through the pain of building an asset in Valentine asset in Newfoundland.
Yeah.
We're now on the cusp of realizing that opportunity in terms of production.
Yeah, totally.
And now you want to get...
I get that.
It's like, we're close to. Why do it now?
Yeah.
Well, because you can't time M&A. We see a great opportunity with Equinox. And it's like, well, why now? And then it's like, with who? Well, Equinox has underperformed, right? Underperformed expectations. So it's then educating the Calibre shareholders as to why and what we can add.
Yeah.
And then that's pretty quickly what we've been able to do through the entire base has come out. And the first step in this whole transaction was to recalibrate expectations about what 2025 looks like.
Yeah.
And then deliver into, which then starts to reframe the product, right? Which then stops the doubting about the individual assets. We have a great portfolio of assets. And the different assets at different jurisdictions, at different levels of their life, but it's a great portfolio. So it's like the focus on delivering into those expectations. So step one was to reframe what to expect from the product.
Yeah.
Then deliver into, which we did with Q2. We've continued to in Q3. We'll have another positive performance in Q3 actuals when we come out. Right? Acts of God notwithstanding, between now and the end of the quarter, things are shaping up quite well. There was a perception of Equinox is that it was an M&A focused growth company.
Buy and build.
Yeah. And what we're focused on is surfacing shareholder value through quality, not quantity. And there's assets within our portfolio that can surface more value for our shareholders in someone else's hands. And we demonstrated that with the recent transaction on Pan and disposing of that asset, which will close here at the end of September.
Yeah.
Right. So, it's like all of a sudden it's creating a little positive confusion within the market. You had Calibre, which was a deliverer of, you had Equinox, which was an M&A. You're putting this together and you can create a lot of value out of this portfolio of assets, right, with the right human capital in place.
Yeah. And that is okay. So I appreciate how you juxtapose those two. Not to say that because Calibre was focused on quality over quantity that Equinox wasn't. That's not what you're saying, but there is a bit of a distinction there in that Calibre model, very specific, right? And now when you say we, I've got to like Casey, we Calibre, no, he's we Equinox 2.0 right now.
Correct.
You've jumped into the CEO seat. This is your company now. You're running this. Much bigger portfolio, 9 producing assets right now in Equinox 2.0.
Yep.
And are you, okay, actually, before I get to that, I want to ask you one more question about the transaction itself, because a lot can go wrong when two companies merge like this in the mining sector. And very often shareholder expectations are not met, at least in the near term. Now, that hasn't been the case for you. So we can talk about a bit of shareholder resistance on the Calibre side. We're in this fast moving car. Why would we jump in bed with this laggard? And on the Equinox side, why would we dilute right now, right? But the market is the inevitable truth teller, and the market is telling us they love this transaction and you're being rewarded for it. What are the most common reasons, however, that transactions don't meet investor expectations, and what did you do differently?
Yeah, and I think it probably comes back to the genesis of where this comes from as well. If we think about how did this acquisition come? This wasn't a process. This was a conversation that was had between Blaine Johnson, right, and Ross Beaty a year ago. It was like, hey, you're doing something, we're doing something. How could this be something that's better together? And it kind of evolved organically.
Yeah.
And then when I started conversations with Ross, which was probably September of last year, it was like, that was the first time I'd met Ross, but we spent some time together, and it's just like, right, let's have a conversation. Mm-hmm. And I think that was, we had a common focus for what frustrated Ross, right, is that Ross wanted to create shareholder value. He'd had all the bits, but hadn't been able to. So having a discussion with myself and Blaine and Doug, Ryan, then demonstrated, hold on, if I add this into my product, I'm going to end up with a stronger product. We have a portfolio of assets that we can surface more value from our existing shareholder base and the Equinox shareholder, right? So it was a bit of a perfect marriage, right? It wasn't a forced marriage. It was just like, hold on, this makes sense. Because Equinox had underperformed, because Calibre was on the verge of putting these things together, with a much stronger product. I think that was kind of the genesis of, and you've never heard anyone talk about synergies as a consequence of the transaction as well, right? And we've talked about this before. We talked about it when we did the Marathon transaction for Valentine, is that I despise the word synergies because it's typically what I've found in my 40 years of history is that it's a word that people use to justify why they did the transaction. And you can never synergize your way to success, right? You've got to look at it and you say, what is the potential for that asset, right? What can that asset generate? And then you say, okay, how do we then surface that? And we surface that by ensuring that our organizations understand what it is we want to deliver, and they're enabled and empowered to be able to deliver into that. If you want to call that a synergy, that's great. But if you're talking about an M&A savings, there's never enough G&A savings from an M&A to be able to justify the costs associated with the transaction.
Yes. Okay.
Right.
Okay.
And because you do get into that growth for growth's sake, but there's an opportunity that's created with the opportunity to grow, but you've got to deliver into the expectations.
Yes.
Right. And a lot of organizations fall into the trap that the value is created on the promise. In my simple mind, the value is created on the delivery into the expectation. So undersell the expectation, deliver into it, and I think you'll surface a lot more value.
Yeah.
Because again, if I can come in and I can talk to you about a product that's going to produce, take a Greenstone, for example.
Yeah. It's your Ontario asset.
Ontario asset, right? If I look at that and it's going to produce 300,000 ounces a year, just say, at a $1,500 margin, I'll say, is that attractive to you? Yes, it is. So if I can explain what that asset looks like, and I don't have to come out and say, well, it could be 350,000 ounces at $1,250 an ounce, right? If I have to entice you to invest into it, then there's probably more disappointment that can be had than positivity. If you can look at the asset in a kind of a more conservative view and say, yeah, that's an asset I want to be in, and then we overperform, there's more value to be created. If we have to torture the asset to confess an answer that you want to see, there's probably too much risk in that delivery.
Yeah.
And then you've got to really assess as to whether you really want to be in that asset base, whether your risk tolerance is, right? I think in my simple mind, the value is about demonstrating operational excellence, deliver into those expectations, because my issue as an investor is deployment of capital, right? When I look at this, and I'll step back, take a breath and step back. If I look at Calibre coming into Equinox, I looked at it as an investor. I have 3/4 of my net worth invested in this product. So what you're interested in truly fascinates me because I'm aligned with. So I looked at it and said, how can I create value for our shareholders? Because that's creating value for me. And I look at those assets and I say, with the right management in place and the right focus, we can surface more value out of that from a share price perspective. That's the value. And that's the way I look at it. I take that view that it's the next 12 months, 18 months, 2 years. It's not the next quarter by quarter.
Yes.
But I'll create the opportunity out the next 18 months by delivering in quarter by quarter expectations. Look at Calibre, right? Calibre, we're an operator for 22, 23 quarters, and all but 1 quarter we delivered into expectations.
That's an amazing track record,
right?
By the way.
And when we look at what that meant when we created that opportunity at the end of 2019, when we partnered with B2 Gold at 60 cents, right, to raise the capital to purchase the Nicaraguan assets, and then vended them into Equinox just here a few months back at north of $3. That's a healthy return.
Yeah. That's fascinating. And 22 out of 23 quarters.
Correct.
Right. Okay, there's a couple different directions I want to go here. And first, actually, one more question on you mentioned you met Ross September of last year. That was about 12 months ago. I have 2 questions out of that. When did you, and it sounds like you inspired this conversation, right? Maybe you instigated the initial conversations of the merger?
No, I was really sitting with Blaine Johnson.
Yes.
And Ross.
Okay.
Right? That's the genesis of.
That's the genesis of.
Right. It was the 2 chairmans coming together and going, okay,
right.
We're aligned in the same thing. We want to create shareholder value.
Right.
How do we do that? Could these 2 things be?
Yeah.
And one of the things that clicked pretty quickly is we have an asset base, but we need to get that right portfolio of human capital together to surface it.
Yeah.
So then it became pretty important as, given that I have a little DNA in Calibre, that how was I going to blend with Ross and the team at Equinox to be able to create a product that can deliver into those expectations? Because Ross was looking for a solution. His issue, he'd put together these bits, but they hadn't quite delivered into what was expected, and that's why the share price was lagging.
Yeah.
So then we need to have the conversation about how do we think we'd interact. It's about the chemistry. So we have each other's back. If you're looking for a steward or a statesman, as you kind of foreshadowed earlier, how could you not want a guy that looks like Ross Beaty?
Sure.
Right? What a great person to have, right? What was his single largest frustration is that we hadn't yet surfaced the value.
Yeah.
What can I do? How does it look? Well, Darren, could that be part of the solution? So that's where we looked at the 1 + 1 = 3. It was like, how do we blend these 2 organizations together? And, we look at the change that's happened, and if we think about, from an operating perspective, there's been no changes in people at an operating level as a consequence of the transaction.
Okay.
If we think of from a corporate perspective, we're talking about between both organizations, there's 4 people who today were employees of Calibre or Equinox 6 months ago that aren't today.
Okay.
That's an insignificant amount of change.
Yeah.
Right? And you look at that and you go, so there's a huge and great human capital components about now aligning that behind, right? Again, we had 2 CEOs, we need 1, right? So there's some obvious things, right? We had 2 HR leads, we needed 1. That's the level of change when I'm talking about the 4 people. Otherwise, everyone else is. So now we have this human capital who said, how do we align that human capital behind creating shareholder value? So that's what Ross and I and the board have been working with the leadership teams, is that our reason to exist is to create shareholder value, right, through share price appreciation. What is it? It's not to produce 1 million ounces a year, right? That's a means to an end. Our means to an end is to ensure that every person in our organization is aligned behind our vision of creating a $20 billion company.
There it is.
Right?
Yeah.
At a $30 share price.
Yes.
Is it reasonable to expect? And I can go through and we can talk about the comps and do a comparison with respect to 500,000 ounces out of Canada and do the comps with respect to Alamos and 2 times the market cap and the other 500,000 ounces, which I'm happy to talk about. But it's reasonable to expect that over the next couple of years that we could be a $30 share price. So what do we want people to do? We want everyone to be aligned behind that $30 share price and then create a little bit of positive confusion. People go, well, I don't really impact anything. I said, you do. Because if your role doesn't impact our ability to deliver, by definition, the role shouldn't exist.
Mm-hmm.
If you're in a role that doesn't add value, then we need to repurpose that human capital to be able to align it behind. Because people get confused. They look at it and they go, well, how do I impact? Well, if you're in a fly-in, fly-out site, you're only a bad meal or a missed flight away from chaos.
Right.
So the person who's feeding you, right, and the catering contractor is a critical part of that puzzle. Right? And people say, well, if it's a lower level position. Yeah, it is, but it's critical. It takes the village of people aligned behind, and it's having everyone understanding how they contribute too.
It's not talked about often enough in this business. What you're saying right now is that like very focused, solid entrepreneurship. You're looking at everybody on the team and making sure they're clear on how they're contributing to the North Star. In this case, it's the $20 billion valuation.
At a $30 share price.
At a $30 share price. Yeah. And that's clutch because as we know, it doesn't always work out that way, right? You can quintuple your market cap and the share price sometimes doesn't move, right? If you've been a bit too free and loose with your issuance. And you also mentioned 75% of your net worth tied up in the company. And I kind of like sat with that statement for a while. I loved hearing it because your livelihood is so tied to the success or failure of this endeavor, right? You're on the bus fully. It's very important.
No, absolutely. And it's because, I don't spend a lot of time looking at markets, looking at other investments. I don't have enough time.
Yeah.
My reason for being is to be able to surface shareholder value. That's why they pay me what they pay me to do that. And if I'm distracted by anything outside of that, then it's destructive to my shareholders.
Okay.
And I got to be unrelenting and looking for opportunities too. That's why I don't get distracted by it. I don't invest in any other products. Not because I don't like them. It's because that's not my role. My reason for being is to do this, and I'll back my own product.
Okay. So what I want to hear from you now is you mentioned the refreshed Equinox 2.0 vision, right? And what's different right now? What's the highlight, Darren?
Yeah, no, I think what it is getting that organizational capacity behind that North Star. Because everyone comes to work every day wanting to do a good job. Their jobs are important to them and they want to go home rewarded for a day's work and be associated with something that's good. And if we get those hearts and minds and souls behind the product and they're thinking and making decisions like owners, we're going to end up with a really great product. So that is the premier sort of everything subordinate to that. And then we say, okay, now what's our portfolio of assets? So if I can get those people in thinking about what those assets are, they look at everything a little differently. They can bring us lots of good ideas. And then we can then make decisions together about what is the right approach to be able to surface value. Because people are under the misconception that Darren's going to come in and fix things.
Sure. Right.
And it's like, no. All I'm going to do is provide the opportunity and the environment that allows for things to be fixed. And I do that by ensuring the organization is engaged, raising issues, and we address things. Right? Because the people who are running the business understand the business much better than I do.
That's a great question. What is your core purpose, if you were to distill that as simply as possible as the CEO of Equinox Gold?
Is to ensure that the vision of where we want to get is clear, and then be a resource to the rest of the organization to remove the obstacles that get in the way of them delivering into that. That's my only reason.
Yeah.
It's not to make decisions. If it needs to come to me, I will. But the intensity is that the decisions should be made as lower level in the organization as they possibly can, because arguably they're the best people who are informed and capable of being able to make those decisions. My role, vision and enabling that decision making and removing ambiguity for the business. The single largest cancer in any organization is ambiguity, not knowing where
100%.
and why.
100%.
Right.
You echoed something that a mentor shared with me like 10 years ago when I was trying to learn how to be a CEO of our organization. And effectively they said, look, you have one job. It's to find the best possible people on the planet and then get out of their way, right?
Yep.
And if you can do the first part right, the second part takes care of itself. It's obviously a massive simplification, right? There's more moving parts and complexity and risk and things to think about, but the spirit is the same. And that's effectively what you shared. Set the vision, make sure the people are aligned behind it. Then your job is to clear the obstacles, make sure the trail is clear, right?
Yep.
Yeah.
Is to remove the ambiguity and ensure that they're adequately resourced to be able to deliver into those expectations.
Yeah.
And that starts with fundamental things like clarity in roles and responsibilities.
Yeah.
Ensuring that accountabilities are clear.
Yeah.
And then ensuring that the appropriate levels of authority are delegated so you can hold them to account.
Okay.
Because, the other thing I see is within organizations is people confuse responsibility and accountability.
Yeah.
And effectively, they're very similar, except accountability has a consequence. We operate in Brazil. We operate in Nicaragua, right? Yeah. In Mexico. Yeah. Now, a little known fact is that in Spanish and Portuguese, there is no word for accountability. It doesn't exist. It's responsabilidad.
Okay.
Right? There is no accountability. Right? So even those Latin countries or Latin language, which is the genesis of English, it doesn't exist. So you've got to make it clear. What is the difference? Because people use them interchangeably. The difference between responsibility and accountability is consequence. It doesn't mean it's negative. It doesn't have to be weaponized. It's a positive thing. There's a positive result. Let's reward it. Let's take a moment, respect the past. Right? How do we get here? Let's embrace the present, but let's spend most of the time shaping the future. And we create that environment, and you'll find that people will take the hill. They really, really will. And if you can get that organization line, that's why we've seen pretty quickly some changes, even within Equinox 1.0 and some of the assets. Greenstone, we've added a little resource out there to help from a human capital perspective and a little bit of equipment. But really what it is creating the environment that allows for those people to take intelligent risks and deliver into expectations. And also that if we need to reframe the product, let's reframe the product. Nothing breeds success like success. So if you're always trying to defend why you didn't deliver into, it creates a pretty caustic sort of environment. But if we can allow some people to have some success, it'll create that groundswell. That's why a critical part of our success in reframing the product was to reset expectations from a guidance perspective. And we're starting to see people, instead of looking at their shoes, starting to be a little bit more upright.
100%. 100%.
Right? And it's like, so then they're starting to, and they'll make mistakes, and that's okay.
Yeah.
I have a term in our organization. It's not about making the right decision. It's just making the least wrong decision we can.
Yes.
Because we'll make a decision today, and a month from now, the decision we made may be different because the environment's changed. And you need to adapt to the environment. Doesn't mean you need to forego what you thought was the goal.
Yes.
But if the environment doesn't allow you to, or there's an opportunity to do better or less than what you said, you need to adjust to make sure that people can feel good about what they're doing to deliver into.
Okay. I want to talk to one of your people because I noticed today you brought in Ryan King, who last time you and I chatted when it was Calibre, right after the marathon transaction, I spoke with both of you.
Yes.
Ryan's the vice president at Equinox Gold. Can I bring him in? Can we chat?
Yeah, absolutely.
Yeah?
Absolutely.
All right. Let's get Ryan in here, guys.
Okay,
Ryan, you want to sit down?
I'll sit down.
I'd love to chat with you, man. Come on.
Good luck.
Right.
Be kind on that. Be kind.
Please be kind.
See you, man.
Please
Take
be
care.
kind. All right. Have a seat. Okay. It was super fun just jamming with Darren because he's such a visionary, I find. I actually find myself very inspired as an entrepreneur when I chat with him. And he's the guy to facilitate the merging of cultures between these two organizations. You didn't have to stay, Ryan, but you're here, right? You're with Equinox Gold, clearly for the long haul. Now I want to break down the value as you see it, because the investors are going to be asking that question, right? Where bit of upside after the transaction. Has the train already left the station? What's in the future for me, right? Now, obviously, there's something in the future for you,
Sure.
but you wouldn't have taken the seat.
Right.
So I felt like it'd be a good time in the conversation to swap out Darren, bring in you. I want to walk through the assets. I want to walk through in a bit more detail the refreshed 2025 vision from a production standpoint. And let's just start there. Like,
Sure.
How do you feel about this transaction? Why did you stick around? What's the upside for you?
Yeah, I mean, it's a really good question. I think Darren also pointed out the amount of equity that he owns in this business. So this isn't just about a salary and a job. This is a big portion of our net worth, right? And being involved in the direction of which way that goes is important, particularly to me, and I know it is for Darren. For me, I mean, again, this is probably close to over 75, maybe 80+% of my personal net worth
Of your
is
personal
into
net worth.
this one company.
I love that.
And it's obviously it's a big number.
Yeah, I was going to say, is that scary?
For me, and it drives a level of behavior as an owner in the business to be focused and diligent, but also ethical and transparent about how we do things. But that's really the driving force behind this, is that not only do I see an opportunity in the gold sector as a whole, because I do believe that we'll likely see higher gold prices, but also the unlocking of value within this portfolio now today with the with the leadership that's in place, with the experience and the expertise to unlock and deliver this portfolio now. And I think this has kind of been holding back Equinox a little bit. And now with Darren, Dave, and others that have had tremendous years of experience in operations, in big, maybe it's lower grade, but big, large open pit assets, to be able to unlock that. And also, but look at the assets from a different perspective. Maybe there's a different opportunity. Maybe there's a different way to do it that could unlock that value. And I think that's really important. So that's kind of what drives me. Also learning from Darren, Dave, and other people in the business is also a driving force for me.
I want to unpack that unlock concept a little bit and get a little bit granular. We can get to the assets, but maybe it's better to start with the portfolio, right? Because if I look at it today, there's 9 producing assets in Equinox 2.0 portfolio. And, the highlight reel would probably be Nicaragua, producing 220 to 240,000 ounces per year, thereabouts. Yep. Obviously, Greenstone in Ontario, and the soon to be in production Valentine in Newfoundland. Right. And then there's a handful of assets that are producing less than 100,000 ounces per year. Now, fresh set of eyes on that portfolio. Do you like what you see? Do you expect to be making any adjustments? Right. And if so, what could you speak to?
If we look over the last 10 years as Equinox 1.0, they've done a great job of assembling a large portfolio. And I believe that the complement of the addition of Calibre is pretty significant. Right now, during this period of time, we're in an interesting inflection point. Put the gold price aside, but we look at the portfolio. We're going from more of a Central America, South America portfolio, tiering up in terms of jurisdiction. So when we look at those types of companies in tier 1 jurisdictions, they trade at a premium versus companies that trade in non-tier 1 jurisdictional locations. So we're in the process of going from, I don't know exactly what percentage, but probably north of 60, maybe 65% of our net asset value tiering up in terms of its jurisdiction to Canada, to the United States, et cetera. So I think that's an inflection point that investors will be watching.
Yes.
Institutional investors, analysts are watching, obviously various forms of family offices and retail. But so that allows us now to sit back, obviously not sit back and just, rely on that, but also look at the whole portfolio and say, what else could then shift the narrative and the value? So could a Central American asset suite like a Nicaragua or a South American asset suite like Brazil be better off in someone else's hands, in someone else's portfolio?
Sure.
Right? So driving that sort of more North American centric asset base, could it be? Could be, potentially. So you're always looking at the portfolio to see what is the right mix, what could add value for our existing shareholders by maybe not owning an asset, whether it be because it doesn't have a huge mine life, whether it be because it has a higher cost profile, whatever the reason, maybe there's an opportunity there. So we're always looking at that. And I think now is the time where we're probably more looking at the divestiture angle.
Yes.
As we've recently announced the divestiture of our smaller Pan asset in the portfolio, a great asset,
Yeah.
an enduring great location, but a smaller in the portfolio of the company now, as we're call it 1 million ounce a year roughly portfolio
Yes.
producer. So
What was the Pan production?
Yeah, 30 to 35,000 ounces
Annually.
a year.
Yeah.
Annually, yeah, that's right. So a smaller producing asset in the portfolio, but nonetheless, it was a contributor. But that just shows an opportunity, and maybe the thinking is changing a little bit in terms of the strategy for Equinox. It's not just about growth, but it's about looking at the portfolio and what is going to drive share price performance. That's a key for us, is looking at all the share price per share metrics to drive that valuation. And so you look at we've been investing capital into Valentine. Equinox 1.0 has been investing capital into Greenstone in Ontario. So Greenstone in Ontario, Valentine in Newfoundland. What's also interesting is that we're at this inflection point where that capital investment is now going to slow down, and we should start to harvest the results of that time and that effort into unlocking the value of those portfolios. So in a cash harvest, and then allowing us to delever the balance sheet as we've, put those tools in place to be able to build those new
So that's
assets.
the season right now for Equinox, right? Both companies have been growing aggressively, applying different strategies, allocating capital into future productivity. And now it's time with this marriage to reflect on the company as a whole and cleanse it a little bit and say, are we okay? We've got a lot going on. We've got a lot of assets. We're in 5 countries. We've got things happening in Newfoundland and Ontario. Are we the absolute best million ounce producer that we could be?
Sure.
And let's be that now.
Yeah.
And then probably look at growth again in the future.
And you also have to then look and reflect, what does make a top quartile valued gold producer? What makes that? And when we've done some of our analysis, it's the tier 1 jurisdiction. It's on Australia, it's in North America, key jurisdictions like that. It's a high quality, high margin asset. And then it's really likely the team that is able to deliver on those assets.
Yeah.
So when we look at that, we see, okay, we've been tiering up in terms of the quality of the assets, the jurisdiction of the assets, and now we have the team to deliver these assets. So we're right at that point in time now where it's like, okay, you've done all the investments, you've assembled the team, you've got it here together now. Now let's see what can be done with this portfolio and what else could be divested of.
See, okay, I like how you did that. You kind of outlined the 3 points. You got to have the tier 1 jurisdiction. It is more important now than ever to investors, and I think for good reason. And you and I both know many investors who aren't concerned about jurisdiction. They're just concerned about asset. And they say, look, the political risk in Canada is just different from the political risk in Nigeria, right?
Yes, it is.
They both have risk. It's just different, right? You could be stuck in a coup, or you could be stuck in policy and permitting. But I think what you said is absolutely true and reflected in the share price of the companies, which is what you got to pay attention to, right? And so we're upgrading the tier, 65% of the asset base now in tier 1 jurisdictions. So you feel like you're ticking that box. Jumping down to point 3, the leadership. I just have to agree with you based on the track record of both yourself, not just with Calibre, but with Newmarket prior to. Darren, of course, who I just spoke to, and then you're marrying the team at Equinox, led by Ross Beaty, the broken slot machine in the mining sector, 14 companies under his belt. All 14 have been 10-baggers. That's remarkable. And this is his swan song. So I know he wants to go out with a bang. But talk to me about point 2 there, upgrading the quality of the asset base. So we're talking about margin. So where should people pay attention here? What justifies that point?
So when we look at tiering up in terms of the asset quality, if we look at the portfolio, there are assets that are mature. They've been around a long time.
Yeah.
They were originally built on what was the resource or the reserve, and over time they've had depletion. They've had costs go up. So now we look at the quality of a Greenstone in Northern Ontario, or Valentine in central region of Newfoundland. What I'm excited about here is the fact that they're new assets, so there's long lives in front of them.
Yes.
I think that's really important as a probably also into the mix of the quality is the where
mine
they
life.
are in the cycle of their life.
Yeah, 100%.
So brand new and based on reserves, we know that there's decades in front of them.
Okay.
We also look at, something like a Greenstone. It has had expiration, but there's a 100-kilometer belt where there hasn't had a huge amount of greenfields type exploration. And we look at Valentine. Valentine itself is a brand new mine, but it's a greenfields project, meaning there's never been past production there in the past.
Mm-hmm.
Meaning that also at the same time, there's been probably a fairly limited amount of exploration along this multi-kilometer big fractured fault going through this property, meaning that there could be an opportunity where there could be a lot more gold there. And in fact, I go back to 2024. Calibre acquired the asset, closed the deal of Marathon Gold in January. By the end of the year, we had already discovered a new zone within that property, about a kilometer south of a known resource. So what we always look for, what adds share price performance, is those three critical things that we talked about, but also finding new. Expansion of the resources. Yeah. And we're in some fantastic areas where there could be tremendous amount of upside. And I think back to the times at Calibre or even New Market. And what drove the share price performance was, yes, the gold price was robust and increasing at the time, but the biggest value driver in my view was delivering on the operations and finding new resources, discovering areas.
Right.
Even within an operating portfolio, it has a tremendous impact.
Yes. And that is kind of in addition to the Equinox culture that wasn't super present for the last few years. Sure. Not to say Ross hasn't demonstrated that with previous companies, but the Equinox model was the buy and build. And so we're bringing this culture to marry that, right? Sure. Which is the learn and expand present assets and find out what else is under there. And I remember we were chatting maybe a year ago, last time I had you and Darren in the studio, and you're like, Darren always says at the end of the day, when you're in the pit, you're mining the resource, not the reserve, right? You keep going as long as the rock's there, right? So at a high level, Ryan, somebody who's looking at this today, and I actually want to ask you, have you guys become super clear internally? Has the grand vision for Equinox changed, and are you clear on that yet? Or is there still some integration and learning that you want to do first?
It's only been a couple months.
Yeah.
Right? It's only been a couple months. So it's happening quickly.
Okay.
The vision is happening quickly. I mean, Darren's done a tremendous job of pulling the board together and then leading the organization to the North Star, which is that multi-billion, $20 billion plus company.
There it is.
Based on share price appreciation.
Yes.
Not on going out and acquiring and diluting the shares further.
Thanks for that.
So I think people are getting a little bit more excited. They're getting a little bit more confident. Mm-hmm. So that actually helps drive the organization to being a little bit more confident about everything they're doing on a daily basis. Yeah. Which I think
well, they should be, right? Because if you had any apprehension on either team after the merger, you can look at the market response and have conviction that this was the right decision. Let's go.
I mean, yes, but at the same time, we've had some wins in the gold price in the short term. But to your point, I think yes, because people are starting to get, even in a period of a short, what has it been, 2-3 months? Mm-hmm. We've gone through a reset of expectations from a production and cost perspective. And then for the first quarter of that post-reset expectations, we delivered into that.
Yeah.
And we foreshadowed what is expected to come in the future. So there's that little bit level of buoyancy in the market going, hey, wait a second, this was a tremendously undervalued equity. When you put the two together, it looks like there's an opportunity here. And to your point, I mean, the market is starting to see, okay, there's an opportunity here.
Yes.
And we are seeing a share price react as a consequence of what we've done.
Okay. So I feel like we covered some of the smaller assets in enough detail. You're looking critically at them. You're keeping the best. You might make some decisions with some of them. We'll wait and see on that one. There might be some divesting, but we'll wait and see. The three big assets, the one I want to ask you about now is Valentine. That's the next to come online. So just walk the audience through the timeline, what they can expect to come out of your Newfoundland Valentine asset, which is forecasted to do over 200,000 ounces per year.
Yeah. So where we sit today, we just recently put out some news on first ore through the plant. So ore is now going through the plant. We've got a tremendous team in place there that has experience commissioning plants, commissioning mines. We've got people that have operated mines all around the world, whether that be a process plant manager, mine manager, overall site manager in Jason's here. So we've got a great team in place that will be able to manage through the process of a ramp up. So, a ramp up is not an easy process. You're turning let's call it $1 billion plant to produce metal.
Yeah.
So there's always going to be things that come up along the way. And there have been some of those already that they've been able to react quickly to, and then, make short-term or even medium, long-term fixes within the plant. So and they've already been able to anticipate what could be some of those issues that have come up and got in front of it so that there's not those issues, right? So that ramp up process, we've told the market we would expect to be at the nameplate capacity. Now, keeping in mind that original feasibility study nameplate was going to be about 2.5 million tons of throughput through that plant a year, which would result in a life of mine, or the first 12 years of a life of mine reserve life of mine, average of about 200,000 ounces a year. Okay. So so we would expect to be at that nameplate by, say, the end of Q1, maybe sometime in Q1 of next year, if all goes well.
Okay.
But I think it's worthwhile pointing out as well that when Calibre first did a capital cost update, we also included some additional tankage in that update, which could allow for the plant to maybe go to 3 million tons of throughput. So there is that potential flexibility to go a little bit, to push the plant a little bit beyond the 2.5 million ton original throughput. So let's see how that goes. That could be, maybe a little bit of an opportunity for the company to maybe realize that upside. So walking through that ramp up, getting us to nameplate, let's call it, let's say we get it there by the end of Q1 of next year. You're looking at about 150 to 175,000 ounces in that $1,300 to $1,500 range. We haven't given any guidance for that, but that's probably where we're going to end up. As part of this process, there is a phase 2 that was in the feasibility study that would take the mill from 2.5 million tons from the original, technical report to 4 million tons.
Okay.
So Darren and the technical team have also been looking at, is there any opportunity to maybe push that tonnage even further?
Right.
And so there's been a bunch of technical studies and analysis done now where it is likely to be able to push it further, but we're just obviously monitoring and watching how this first ramp up goes, and then we'll start providing the market with some additional clarity. So I believe that we're actually, and again, when we compare this against a Greenstone, it's smaller. It's not as a complex plant as a Greenstone plant. So we would anticipate that we should be pretty effective in ramping this operation up, getting it to its nameplate capacity. We are in the process of doing quite a bit of exploration work across the property. So let's see how that unfolds as well. I think in the beginning here, I said that this is a 12-year of a 14-year mine life. I want to be careful with that because the first 12 years is about 200,000 ounces out of a 14-year reserve life as it was based on the feasibility study. And you made the comment, when Darren's out there, he's mining to the resource.
Yes.
This is a 5+ million ounce in all categories. So 4 million ounces measured and indicated, another 1 million ounces of inferred. And plus, we haven't even talked about, some of the drilling that's happened outside of that could lead to additional mine life. I would anticipate we're here for quite a lot longer than what that kind of snapshot in time feasibility study looked at. So that's why I'm excited about Valentine. I would expect the same out of Greenstone as well.
Okay.
As we continue to invest in these assets. So we're going to be generating a significant amount of operating cash flow.
Yeah.
Right? If we step back and we said, let's call it 1 million ounces of gold a year. This isn't official guidance, but let's just say that's, when you put the big chunky bits together, it's around 1 million ounces. And let's just be very conservative here and say our all-in sustaining cost to produce those ounces of gold is somewhere around $1,800 to $1,900 an ounce. Let's just say that.
Yeah.
Plus you've got some growth capital, plus you've got some other expenses, but say all in, it's somewhere around $2,300 an ounce. Just all in exploration, CapEx, financing expenses. Well, here we are today at $3,500 an ounce gold. You're talking about $1.2, $1.3 billion of operating cash flow.
Mm-hmm.
So a tremendous amount of cash flow generation. As we just talked about, that significant investment into the portfolio is now going to really start reaping the benefits.
Yes. Okay. Yeah, I like how you colored that. So for people who are looking at this story now, I think, and they're looking forward for future news flow, every investor, what they really want to know is what's going to make the share price go up,
Sure,
right?
100%.
What have you done for me lately?
Absolutely.
And what they can look forward to is kind of like, I'd tell them to look 3 different directions right now. Pay attention to the smaller assets because there might be some decisions made there. There might not be, but it's something under consideration with the team, as we talked about.
Sure.
Pay attention to Valentine in Newfoundland because we're still exploring, we're still hoping to expand, and that should be hitting nameplate production by Q1. And so that's the metric, the milestone that we should look for. And we're still investing in Greenstone in Ontario, same thing. And so it seems like it's a season of do less but better at Equinox 2.0, right? You're focusing on what you have, you're refining what you're doing, and you're cleansing the operation if necessary, but getting really good at delivering on that $1 million ounce, I don't want to say promise, but that's the hope, right?
Yeah.
That's the expectation.
Well, that's the goal now with this portfolio. It's not necessarily the goal. I should say that's where we're at with this portfolio. It may be 800,000 ounces.
Sure.
And it may be a tiered up in terms of jurisdiction, whatever. It's not necessarily the ounce number. It's more about the quality and where and what could drive that share price performance. So we're always looking at that.
Yeah. Okay.
Yeah.
And, as a consequence of that, we're looking to harvest, right? And that harvesting for you right now at your, 2,300 estimate cost of production, you're all in. At today's gold prices equates to $1.2, $1.3 billion of cash flow per year.
Yeah.
Yeah. Okay. Ryan, it's an exciting time to be an Equinox shareholder, man.
I think so. And you started off the conversation by asking me why I'm here. And so it's these types of things right at the crux of these inflection points that I think, and so it's twofold. It's the business that it's coming into its own to realize and harvest this cash, and then hopefully be in a position to return capital to shareholders in a short period of time. But it's also what's happening from a macro landscape as well with the gold price.
Yeah.
So it's the convergence of these two where I think, man, we could really see some share price performance over the next couple of years. So that's why I'm excited, and that's why I have most of my net worth in the company.
Yeah. Dude, I like it. I love the team. I love the direction, and it's been so good jumping into the vision with you. So thanks for making the time. So great chatting with Darren as well. So I wish you guys all the best, and we'll be watching the story closely for sure.
Excellent. Thanks very much, Jay. Appreciate it.